Well, after all the new age, stocks or the tech-related stocks that we have seen come out with the IPOs in the last few months, well, now we have the traditional, the old economy companies that are coming in there and tapping the equity markets. And what such company, or a rather large one, is Nuvoco Vistas. Well, the IPO opens today. It'll be open for the next couple of days, and the brief details are up for you on the screen. But to know more about the company, we have the MD, Mr. Jayakumar, as well as the chairman, Mr. Hiren Patel, who joins us on the show. Good morning, gentlemen, and welcome to the stock markets. Well, it's a big day for you guys, and we wish you all the best. But we'd like to understand a few more details. I was going through the details that you all already put out, and by the end of this year, y'all should be at around 25 million tons odd. What I want to understand is, with the current limestone reserves that you'll have, what is the scalability in terms of capacity going ahead?
Well, as you can see in DRHP, we have enough limestone to put up another, I would say, about 12 to 15 million tons of cement capacities.
All right. And how long before you go ahead with that capex of 12 to 15 from 25 million tons that you're at currently, say 35 to 37? When does that round of capex happen? Is it organic, inorganic? How does it go by?
Well, we would like to bring down debt further. So next 15 to 18 months, not much of capex. Post that, we'll start our greenfield expansions. So one by one, we'll put up capacities after that.
All right. So, so the debt, safe to say that the debt has peaked out at these levels. It's at around 6,700, 6,800 crores odd. Post the IPO, it will come down, I think, to around 5,500 crores odd. So it's peaked out at those levels?
Yes, it is peaked out now, and FY23 end, we are looking at less than 1.2 EBITDA multiple. So that's a very low level of debt for any commodity manufacturing business.
Right. Let's talk about cost savings then. What kind of synergy benefits can be, enjoyed by both the firms? Majority of your expansion has happened via inorganic growth. So how much more in terms of synergy benefits is possible right now?
When we combined the New Vista, the erstwhile Imami with Nuvoco, we identified a number of levers by which we can get synergy benefits going. These are bucketed in four. One is on the revenue side, then on the cost side, then we have the sourcing synergies as well as the maximization of fiscal benefits. I'll just give a flavor of these agenda. The big one being launching of our composite cement in East using the New Vista facility. Now we can make any of the premium products in all the states in East. That should give us a huge focus on premium products for the company. On the cost side, with the grinding units in each of the states, we're looking at close to 50 kilometers reduction in primary freight, which will translate into rupees per ton. And also the clinker freight will reduce because of the railway sidings in both the companies. With 7 million tons of additional capacity coming in, huge sourcing benefits we are envisaging. And last but not the least, with the fiscal benefit sites in Orissa, Jharkhand, Bengal, and Bihar, we're getting an incremental 25 rupees per ton in fiscal benefits. All in all, we're looking at last year's EBITDA levels, which we were at close to 1,000 rupees per ton. We are targeting close to 20% improvement in internal levers coming out of the synergies between the two companies.
So if I got that correct, close to around 180 to around 200 rupees will be the cost savings that y'all have, that y'all are pricing in, irrespective of what happens with regard to, the input cost or the selling price of cement. Is that correct? 180 rupees would be a fair estimate?
Independent of the market conditions, the internal levers are slated to give such kind of savings.
180 rupees. All right. We take that point on board. You also briefly mentioned about premium sales. How much does it constitute in terms of your total sales mix as of now? And where is that number headed to?
Currently on the Nuvoco side, we were about 35% premium. On the Imami side, we were 25% premium. Combination, we are looking at Nuvoco going from 35 to 38%. On the New Vista side, going from 25 to 30%. That's a huge shift in premium products in the company.
Right. The DRHP also mentioned some sort of legal proceedings against the company right now. What are those proceedings? When are they likely to end? What is the contingent liability, if at all, any from there?
I think the legal proceedings are largely coming out of legacy as well as the combination of two companies. Out of the four major legal proceedings, one of them is already sorted out in post the DRHP. A couple of them we are indemnified by the past companies, and the one which is the fiscal benefit thing, we have stopped accruing 2 years ago. and it doesn't figure in the cash flow process for the company. So very confident in the coming 1 year, we should be able to clear all these things.
So, Mr. Jayakumar, you're trying to assure investors that there's nothing to worry with regard to, these contingent liabilities or these legal cases that are there. Is that correct?
Absolutely. The company is fully safeguarded. We are on very strong wicket. So we are on high ground. So we should not have any impact.
Point.
And also
we take that point, sir. Another question that I had for you all is, in the last 7 years or thereabouts, the growth has been phenomenal. Inorganic growth, the Lafarge Holcim acquisition, the Emami acquisition as well. So inorganic has been the way to go. Going ahead, will there be more inorganic growth, or will you stick to organic expansion as of now? And also, would you look to move into maybe South India or West India? Because both those two places you all don't have presence as of now. Please go ahead.
Well, we have grown from different angles through acquisitions. We have built capacities through brownfield and greenfield expansions. However, I don't see many M&A options in near future. So we'll be kicking in our greenfield expansions to, achieve great capacities. South, we don't have a plan to go into in midterm or near future. However, we have plans to expand our facilities in West and North.
So of the 12 to 15 million tons expansion headroom that you have right now, how much of that do you think will be organic? How much of that will be inorganic?
That all is organic. Inorganic, you cannot predict. You have to see what comes on the block. So you can't target inorganic capacities.
There would definitely be a couple of assets on the western side. I mean, are you not looking at any of them?
I don't see anything great available that makes sense in company's portfolio. So I'm not looking at anything like that.
All right. How big a risk is this exposure to East India? I speak to a lot of cement companies. A lot of them are adding capacity out there. That's clearly been the strong point in terms of growth. But now with additional capacities coming in there, do you see it as a bit of a risk to pricing?
Not at all, because all the expansions that have come in are projected to be lesser than the demand that will be there in the East. So it will remain a very tightly or short supplied market. That's what our forecast is.
All right, Mr. Patel and Mr. Jayakumar, it's been good speaking to you all. We wish you all the best, and we, look forward to speaking to you all more often after the company lists on the exchanges as well. So those are the broad details. Well, they can scale up capacity from around 25 million tons by another 12 to around 15 million tons organically. That's with the limestone reserves. They're looking at cost savings of around 180 million tons odd, and they don't believe there's any risk in terms of pricing in East India, where they sell majority of their cement, Mangalam.
Absolutely, Nigel. We will keep an eye out on that. And with that, we welcome one of the old economy IPOs into our markets.
And I think this is the final one, in terms of the large cement companies. This is the final one that was there to be listed, 25 million tons odd. And I think after this, I'll be chilling for some time.
You have been chilling for a while. I think this last one was what, Coal India?
Yeah, I know. Coal India, I wasn't there, Mangalam.
Okay, you weren't there. On that note, what we'll do is we'll wrap up on this edition of Chartbusters. Post this, we will be chilling as we leave it to the team of Trading Hour. Looking good for the markets.